All right, traders, welcome to today's end of day market recap. This is Christian from Tribeca Trade Group, and today is Tuesday, January 14th. So, of course, Microsoft just hit the tape. Their earnings, I have actually, if you want to see some of the numbers, excuse me, here they are. EPS 232 versus 230. That beats the analyst estimates. I think the revenue was a little bit lighter than expected. Again, just to kind of go over a couple of these numbers. Don't forget they give out their guidance about an hour from now, 5:30. So just be aware of that. What do they say in terms of commentary and context? We are focused on operational excellence as we continue to invest to drive growth. Microsoft Cloud revenue was 27.1 billion, up 22 to 29%. Constant currency year over year. Microsoft will provide forward-looking guidance in connection with their earnings call. All right, so there you go. So there's some information for you. Looking at the price of Microsoft after hours, and then we will talk about the overall market. It is up. Notice that it has gone up to this virgin point of control. I just put this out on Twitter. Why does that happen? Because price does seek out an area where there was high volume previously where we haven't revisited, right? It has to do a lot with demand and supply, right? So that was a level that also is very close to someone told me on Twitter, which is a valid point, that the 200-day moving average is also right up there too. So that kind of, goes right up to that same point. Remember, that's why I have the moving averages on my charts, by the way. I also use the moving averages quite a bit, in addition to using volume at price. They're both useful. Also, when they align together, I also think it's a bit more significant. You can see the top of value for the month of January, which again is based on December's price and volume activity, also lines up with that 252. So you got resistance using moving averages, using volume at price, and on multiple time frames. So that seems like a logical place for this stock to kind of settle in. And then we'll see if it can kind of do the heavy lifting perhaps later, which is getting through the getting through that 200-day moving average, right? But overall, what does this tell you? I think it tells you that people were really, this is something that we've been talking about, over the last, week or so, is that expectations are really low coming into earnings for a lot of companies, right? I mean, we've heard, Mike Wilson was just on CNBC and he was talking, he's been talking about, like an earnings disaster for companies this quarter, right? I don't think that the numbers that Microsoft came out with is an earnings disaster. Now there's going to be a lot of heavy, a lot of bigger, sorry, not a lot of bigger, but a lot more companies that are going to be reporting earnings that are also very large. Again, what I said in the beginning of this quarter, I don't make any predictions, but I just think a logical thing to expect is that some companies are going to beat expectations and some companies are going to miss, right? Like 3M, for example, is a serial company that misses earnings. Even when it's in a bull market, 3M seems to always miss earnings, right? And Netflix, we had about a week ago, right? Their subscriber numbers were much better than expected. So, again, I kind of come back to that, where the expectations are in this market. Everybody's looking for a recession. Who knows? We may get that recession at some point this year, but everybody's been talking about a recession for 6 or 7 months, right? And these things, one of the things I said to members about a week ago, because everybody seems to be talking about how bad things are going to be or how bad that things are going to get. I live in New York City, so it's not a good proxy for the rest of the country. There are some areas of the country that I believe are going to, suffer a bit more than other, areas of the country. But I would urge people to go out and see what you guys think before, instead of just, following what you hear on Twitter or in the financial media. Go out. Are restaurants busy? Rental car, is it hard to get a rental car? Are airports busy or are they empty, right? These things should give you a sense of whether or not the country is in a recession right now. And again, I'm not saying that it's not going to get worse. You know, I don't have a crystal ball for that, but I think you kind of have to look at things objectively. You know, again, I've been hearing the recession talk for 6-7 months. I said this, I think it was about a year ago, and I sent out a picture. You know, I talked about how airports were busy a year ago, and people told me, like, okay, you know, people were responding to me very sarcastically, like, you know, to wait, it's going to get worse. You know, and things are going to get really bad. So it's almost, and I've said this in some of these videos, that it's almost, you know, the boy that cried wolf. If you remember that that analogy when you were younger, you know, it's the analyst that cried recession. Because again, you know, it's very easy, I think, to make a prediction, to come out and say we're eventually going to be in a recession. Of course, like, eventually we will be in a recession, because there are expansions and there's recessions. So, and anyway, in any event, I'll move on from this analysis, but I hope I say this to, you know, hopefully it makes you think a little bit. Here we are with the S&P. Which is basically, you know, so today was overall getting back to the overall market activity, right? Today was a choppy day. I actually think that's pretty positive, considering, you know, the move that we've seen recently. Some digestion and consolidation is really important. I think overall, especially, right? I'm not discounting at all that you know, interest rates are at a very high level. Right. And I don't think, you know, my view is, and I've said this many, many times, is that I think that we're in, for the most part, the overall market is in a pretty sideways pattern right now. And I think that's because you know, the Fed, of course, is controlling things and controlling liquidity. Right. Right now, our interest rate, short-term interest rate, is 4.3%. You know, just a little bit more than a year ago, it was at 0%. So of course that is going to affect things. So when we see the market, you know, and here's the expectations, we're probably going to get 25 basis points next Wednesday, because that's what Fed fund futures are pricing in. Qs, if you want to look, just so that you understand, you have the numbers in front of you. But, you know, the last 2 days, Friday was up 2.7%. Monday was up 2.2%. I mean, that's that's a big number, right? So that's 5% in 2 days. So if you're thinking that the market is just going to keep going higher as with this level of interest rates, my opinion, and again, I'm not giving any advice or recommendations, but I would be somewhat realistic, right, and understand that it's not a bad thing when the market backs and fills a little bit. You know, so today I view as very constructive, even though, where did we finish? Q's down 20 basis points, S&P just down a little bit. Notice the VIX continues to come in, right? That's something, you know, everybody said when the VIX gets to 20 again, it's going to be death to the equities. Right now we're kind of hanging around there. So again, I'm just kind of shouting out some you know, things to be objective with. What if the VIX doesn't shoot back up, right, like it's done over the last year? You know, it has, every time it comes down to around the 20 range, you know, that's been a sign that volatility is too low. For now, it's kind of sticking around this 1920 level. All right, so that's my view for the day. Bonds also rallied today. They continue to kind of that's TLT I have up on my charts, but, you know, I think that sorry, before I leave this chart of the S&P, notice that we did take out an upside level yesterday. Again, using volume at price, that VPOC, right, an area of high volume that we haven't revisited. That's as far as we got yesterday. And I would watch this 40-34 level. Again, this gives you a nice level, right, to understand, like, you know, to make a decision for the overall market. If we're above 40-34, you know, we could possibly continue to trend higher. It would be a little bit of a warning if we dip back below, again, short-term stuff, if we dip back below 40-34. All right. So, couple other things that I wanted to go over. Bonds. I haven't been talking about bonds like I was a few months ago in just about every one of these videos, but we're kind of hanging in here. You know, the volatility has kind of come in. You know, we're now kind of moving in a more sideways manner here for bonds. Also below the 200-day moving average, or the are the bond 30-year bond futures. 131.25 was resistance. That virgin point of control also lined up with the 200-day moving average. But again, you could see we're doing more back and forth movement than we are trending. What we saw back in 2022, trend down, move back up. Since then, we've been kind of going more in a sideways manner. A couple, names that, I mentioned 3M, right, which is a name that just doesn't do well regardless, bull market, bear market. Look at PACCAR, very, very nice. So this is a commercial vehicle company. It's a name that I actually had on my radar to trade, and I actually tried trading this back in here, right, on the break higher, which I think this happened on a Friday, and then I got stopped out of it about a day or two later. And of course, I wasn't going to own this name into earnings, but look at the move. And again, sometimes these names, you don't have to be in every one of these stocks. You can kind of use, what you're seeing in earnings to kind of tell you how, what the story is. But, do you think that this is a bear market move in PACCAR out to new highs? I mean, so again, I think this is a pretty good thing. And look at the volume, by the way, in this name. So again, it just kind of balances out some of the negative things that we're seeing in this market. To see something like this break out to new highs, I would argue that that's not bearish. So again, we're continuing to see, I think, positive things come out of this market. I think that this was a positive, positive day in terms of we needed to see some digestion. XBI, I actually went back into today. Reminder, I was in this trade for a breakout of the January value area. I took profits here, and since then I've been kind of stalking. This thing came right back into the 20-day moving average, and since then has been climbing. Now, again, it's right back to where it was. Now that this has been taken out, hopefully we can kind of continue higher. Another name that was on, what excelled today was the industrials again. They took a little bit of a break. Perhaps that PCAR helped the group a little bit, but Caterpillar basically got back to almost its high from where it was a little bit more than a week ago. Boeing, which I think is going to be a very interesting report. I think Boeing can get up to 220. I don't know if it does it tomorrow. I would be a buyer of dips, provided that it doesn't say anything really negative. But there's your virgin point of control right at 220 on the weekly chart. So I think that this, could get up to 220, and then, we'll see how strong or weak their earnings call is tomorrow. But again, I would be a buyer on any type of little weakness, and then targeting 220. All right, what else for today? One name I took, again, sometimes I forget to show trades, trades that I'm involved in, but I do like this. This group has been a little bit cooler right now, this metals group, but I like this dip, and I actually bought the dip in this thing today. Right, another one that I added a starter position in today was Bruker. Right, this was a name that we had on our weekend watch list. And, it was down 2.5% today. So again, I would rather, this looks like a breakout in the making and a little bit of a dip. So that's what I did today. I did a little bit of adding in here. The one name that I went long yesterday, unfortunately got a downgrade today, but it hung in there and stayed above my stop for the majority of the day. And Texas Instruments, I think their quarter was decent. I don't think they're a big mover here after hours. You could see that they really haven't done much. Again, I would be watching. I'm very curious to see if the semis can, can continue to kind of move higher and take out this virgin point of control. Very interesting. Sometimes, different ETFs that are the same sector. So SMH covers semis. There's another one out there called XSD, which is equally weighted semiconductors. Interesting how they shuffle, the components in this equally weighted ETF, which of course is going to have the leaders as the biggest weights, because the one variable that changes between quarterly rebalances. So we had a quarterly rebalance in December. We'll have another one in March, right? The they restrike the ETF so everything is exactly the same weight. Notice that things are not the same weight anymore because the variable that floats between quarters is price, right? So these names that are up here, and I'm shocked that First Solar is in here, but you could see that the names that are the top 10 names are the names that have rallied the most since December. So a synaptics, sorry, SITM, right? A PI. These names have rallied pretty decently, but they're much different than you look at SMH, which is a market cap weighted ETF, right? And the biggest weight there is Taiwan Semiconductor, followed by NVIDIA, right? So again, different performance because different weighting scheme. So I actually like this ETF a little bit better. There's a VPOC up there at 202. And I would be playing this ETF versus the SMH. All right, guys, that is it. That's good enough for tonight's video. If I have time, I will send out what I've been sending out on Word, I keep saying this the wrong. It's Substack. I've been sending out this scan that I run, which is basically looks at some of your biggest momentum names, but not extended, right? I'll say that again. Let me say that again. This scan that I have put together, right, uses volume at price on multiple time frames, specifically the weekly, the daily, and the 1 hour chart. If price is trading above those value areas, and we also have a contingency so that they're not extended. So these are not real extended names. These are kind of more of your like fresh breakout names. You could kind of see what's going on here. There's a lot of names and once again, the insurance names continue to show strength. Travelers had a big day today, up 3.7%. So if you're staying with this group, right, this has been showing up on scans for a while now, is that the insurance group continues to be very, very strong. Travelers had good earnings. Chubb is another name that has consistently been breaking out for a while. Again, crazy prints today with this nicey glitch. And a few other names that are in there. But again, you could see there's quite a bit of these. RGF is another name. Unfortunately, that's going to report earnings. Arthur Gallagher is another name that's been on the list, a frequent name on the list. And then, of course, you've got some industrials on there, a couple of the tech. But that's what we've been seeing, industrials, tech, and a couple of energy names in there as well. All right, guys, that's it for tonight, for today's video. Have a great night. See you tomorrow.